Let's talk about rental properties. Owning a rental property can be the key to a great deal of profit and financial freedom if you do things the right way. It can be one of the best wealth builders over a period of time. So if you're looking to make money through rental properties, you'll want to think long term. As you pay down or eliminate principal over the years, you should be able to grow your cash flow. In this video, I will talk about 4 reasons why owning a rental property is a great idea. The first reason, and I will state the obvious here, is that house prices generally appreciate in the long run. Now, this is not always the case, but generally speaking, there is a natural tendency for real estate prices to go higher. This is called natural appreciation. The house that your parents purchased, say 30 years ago, is now worth maybe 10 times for what they paid for it. A good resource to look at this data is the Federal Housing Finance Agency's website. These numbers here are the house price index, also called HPI. As you can see, the HPI is listed here by the state, city, and the region. When buying a rental property, this can be a great resource to see how your state, city, or region has done historically when it comes to house price appreciation. Always remember, past performance is not an indication of the future in any way, but it gives you a darn good idea of what to expect in most cases. Buying a rental property in places where appreciation is likely is a wise move, but you need to pay attention to other things as well. There's a long list of things that you need to look for before buying a rental, and I will discuss those in another video. But what I'm trying to say is that don't rely entirely on appreciation. As a rental property investor, look at appreciation as the icing on the cake. Let's take a look at a real-world example and say you take a mortgage loan for $100,000 and each year for 10 years, your investment property will appreciate by 5%. So by the end of first year, you will have $105,000. By the end of year 2, you will have $110,000. And by the end of year 10, your investment property will be worth $162,000. This is the power of appreciation. Second is cash flow. Cash flow is one of the most crucial wealth generators when it comes to rental property investing. It is the amount of income that is left over after all your expenses have been paid off. These expenses will include mortgage, which is a big one, taxes, insurance, blah, blah, blah. After all these expenses have been paid off, what is left over is important. What you need to look for is a solid, steady return on investment, which can be achieved through a steady cash flow. You do not want to break even or lose money on a rental property, because that, in my opinion, is a loser's game and a path to a financial ruin. You need to find a rental property that is cash flow positive today, and this cash flow will be your biggest wealth generator. Now let's talk about the tax benefits of a rental property investor. The US government likes real estate investors, and that is why they are offered tax benefits. These benefits can be found directly on the IRS website, but long story short, landlords can take advantage of tax breaks by deducting the mortgage interest they've paid to buy or fix their properties. This is typically the largest deduction that can be claimed. Then there's depreciation deduction. There are some strict guidelines for this though. Only the value of the property's structure and depreciating items inside the property, like the appliances and windows that must be replaced, count as deductible costs. Travel costs are also deductible. If you're a landlord who lives in a different state from your rental property, you can deduct the cost of rental cars, airfare, and hotel rooms. Meals that you enjoy during the journey are deductible as well. However, it is a good idea to tread carefully when it comes to deducting expenses for overnight trips. You can easily get audited by the IRS for deducting extra costs that you used to have fun while you're traveling. There are other tax benefits as well, so be sure to talk to a CPA and see all your options. Property owners enjoy a variety of perks at tax time. As long as they keep up with their receipts and have documentation to support their deductions, they have the opportunity to substantially reduce their tax bill. The fourth wealth generator is the loan paydown. Say you get a loan for $100,000 for your rental property and you rent the unit. You are using the rent from your tenant to pay down the mortgage each and every month and building equity. To understand how much equity you're building and how much loan you're paying off, you need to understand that your mortgage is divided into two parts, principal and interest. At the beginning of the loan, most of the borrower's monthly payment goes towards the interest. As the loan matures, the payment concentration shifts. Here is an example. For a $100,000 loan on a 30-year term and an interest rate of 2%, the first month you are paying only $203 towards the principal and the rest goes towards the interest. As the loan matures, the interest paid reduces substantially and the principal increases. Throughout the loan period, however, your total mortgage payment will remain the same, which is principal plus the interest. This is known as amortization. You can easily plug in numbers on different calculators online and see what you are paying towards interest and principal each and every month. Slowly and gradually, you will pay off your loan using the rent you're getting from the tenant, and this is a great wealth generator. Now here's the reality check. It is important to have a safety cushion of capital in case of unanticipated problems. Tenants don't always pay on time, which can throw off your anticipated monthly cash flow. They also sometimes don't take good care of your property, which means added costs of repairing the property as needed. However, you can decrease the risk of renting to a bad tenant by thoroughly screening potential tenants. Make sure you analyze the property and run the numbers. Rental property can be an excellent investment if you approach it in a business-like way, but you'll want to understand as much as possible what you're getting yourself into before you lay down your money. While the appeal of generating a passive monthly income with real estate is high, it is important to remember that it often requires a lot of work to keep the income flowing. Remember, rental property investment is not a get-rich-quick strategy. It takes commitment, persistence, and maybe even a little bit of luck.